anybody likes Japanese yen. So if you do trade Japanese yen and follow in our trades, it's time to sell short. I'm looking to sell short at 104.207. Okay, 104.207. So this is where our signal generated at this price level. So let's see and wait if it will get executed. This level. Just want to remind you, if you would like to get this strategy, you can find it on our website. It's the website written on red ticker. See? All our purchase or CFDs you can see on blue ticker. And again, I want to remind you, this is not demo account or some virtual account. We trade real money. We trade not only our own money, clients' money. And while I was talking, you can see we sold short, we open position on Japanese yen at 104.207. Okay, speak to you later, guys.
Welcome back to Bloomberg Markets. This is the European Open. We are now 30 minutes into the trading day. Let's take a look at the stock story so far from the perspective of the stock 600. The European benchmark SXXP is the ticker. Here you can see we've been up and have come down quite a bit here, now only up 1 or 0.2%. If you pull up the GRR, the group ranked returns screen, you'll see that the biggest gainers today are travel and leisure, energy and retail. The losers, auto parts, automakers, chemicals, and media. So a little bit of a mixed picture there as well. Looks like kind of the same balance as we've got in terms of the gains on the stock 600. Let's get the Bloomberg First Word News. For that, we go to Laura Wright. Laura?
Thanks, Matt. Vice President Mike Pence is signaling he has no plans to oust President Trump over the deadly riot on Capitol Hill. Bloomberg sources tell us the two spoke for the first time since the violence, pledging to work together until the end of the term on January 20th. If Pence fails to act, House Democrats are planning to push forward with plans to impeach President Trump again. The UK may need to tighten its lockdown restrictions if people do not follow the rules. That's the latest warning from Prime Minister Boris Johnson, saying any complacency about the disease is misplaced. But he's also risked undermining his own appeal with a 7-mile bike ride across London. Health Secretary Matt Hancock defended the Prime Minister, saying a long walk or cycle ride are allowed. Pfizer and BioNTech are boosting vaccine output by more than 50%. They're now planning to produce 2 billion doses of their COVID-19 shots this year. The vaccine is intended to be given in 2 doses 21 days apart. But some countries, including the UK, have elected to stretch out the time between shots in an effort to vaccinate more people. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura Wright here in London with your First Word News update. Now, the UK is officially going it alone after leaving the EU, of course, but uncertainty remains in many key areas. In an exclusive interview with Bloomberg's Maria Tadeo, Clément Beaune, France's junior minister for EU affairs and a close ally of President Emmanuel Macron, said the UK is still not fully sovereign despite Brexit.
The UK has secured in this deal access to the EU markets, which we were ready to provide for, but respecting in many respects our rules and our standards, which limits the ability to be fully sovereign, but that's a balance that shows. And I think in a way, it's not the greatest situation because they will have access to the markets, but they will not decide on the rules of these big EU markets. So I think it's much better, and we should demonstrate it, insist on it, to be within the club and to be able to decide on these rules.
And there's one area that the UK did not get a deal yet, and that's the financial services. That's the passport and that's the equivalence. That is huge because, I mean, the City of London depends on that. And we have seen some banks, recently Goldman Sachs, moving to Paris for that same reason. There's a lot of uncertainty. And the Prime Minister, he says, we don't have everything we want, but that doesn't mean we can't get it in the future. And perhaps we get it in the future. Do you think that's going to happen in 2-3 years' time? The EU is going to grant full equivalence just like that?
No, passporting is over. That's, you were mentioning the consequences of Brexit. That's a clear-cut consequence of Brexit. So no passporting anymore. And there's no way there can be a passporting when you're out of the EU. That's not possible in our legal framework. What is possible, but it's a unilateral decision from the EU to be decided by us 27, is to give equivalence, so possible access to our financial services markets on an ad hoc basis, meaning that you look at the segment of the market you want to give access to, you decide yourself, EU in this case, and you can also revoke this authorization of access. So it's a very, very different world from the one we were living in before 31st of December.
Bloomberg's Maria Tadeo there, speaking exclusively to France's junior minister for EU affairs, Clément Beaune. Maria is here with us now. So, Maria, great interview there. How much is the EU willing to give the UK in terms of the financial services industry? I think that's the $2 trillion a day question.
It is, Matt. And I mean, you pleaded there very little. And the thing about him, and this is why it's interesting to speak to him in particular, is that he is very close to French President Emmanuel Macron, and he is across every subject that has to do with Europe. So it really does give you an insight into the French position, and it really does give you, to some extent, an insight into the mind of Emmanuel Macron. And he was very clear. He said passporting or anything that looks like passporting, that's not going to happen anymore. Equivalence, well, that depends, but the UK should not assume there will be full equivalence. And the thing about it is that this is a unilateral decision. We could decide when to give it, and we could decide when to remove it. So there will be uncertainty. And he also stressed, in his eyes, that the business community and the investment community, they need to grasp, and they still haven't done this. And in his view, the idea that business will change, that things will change in the city. Maybe we haven't seen it. It's been 10 years or 10 days into the year, but that will come in the next few months, and they will become more apparent. Of course, what I would say, the caveat here is that this is the French position. They're always the toughest on the UK, and anything that comes out related to equivalence will be an EU 27 decision. So that could change and soften up. But the French position is very clear. Don't assume you're going to get anything.
Yeah, I thought it was interesting, though, how you asked him, is there going to be equivalence? And he said no, then went on to set out why there isn't passporting and why there might be equivalence. So we'll see where that conversation goes, Maria. This, of course, is in relation to Brexit, and the conversations will continue, certainly around financial services. But within the EU's borders itself, Italy is facing its own political crisis. What's happening there at the moment, Maria?
Yes, Anna, and Italian politics, they're at boiling point, and this has been happening now for weeks, but really today is a big day. There is a very important meeting that is happening later tonight. This is very much related to Matteo Renzi, the former Italian Prime Minister, and the Recovery Fund. He says it doesn't go beyond, or it doesn't go far enough, it's not ambitious enough, and he could walk out of the government majority. That is a problem for the Conte government because he needs his votes. Otherwise, this government could fall and it could crumble, and this is happening, let's just remember, in the midst of a pandemic and in the midst of the vaccine rollout. So there's two scenarios that are opening up here. One in which we do see the Italian government fall, and that is problematic. Another one, perhaps more benign, in which Matteo Renzi decides to stay. He gains power within the government coalition, but there is no election, and that is the key. That would avoid an election in the midst, as I say, of a pandemic.
All right, Maria, thanks very much. Maria Tadeo in Brussels after her interview with Junior Minister Bohm. Now, up next, big tech turns its back on Trump. Social media giants face an investor backlash as the response. We'll discuss. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 41 minutes into the session and looking at a pretty mixed picture here with the DAX coming down to no change. The CAC and the FTSE now off more than 0.1%. Let's get the Bloomberg Business Flash. For that, we go back to Laura Wright in London. Laura?
Thanks, Matt. The chairman of UBS is reiterating his support for CEO Ralph Hamers after a probe into his role in a money laundering scandal at former employer ING. But Weber is declining to say if Hamers will stay in the job.
We're very convinced that, for us, nothing has changed at this point in time. There's no new news. We're monitoring the situation, and we'll update it as events happen. I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
Renault's sales dropped over 20% last year to under 3 million vehicles. That's a steeper drop than the overall 14% slump for the auto market. Electric vehicles were a bright spot for the firm, with the fully electric Zoe more than doubling its sales to 100,000 units. That's your Bloomberg Business Flash. Matt, Anna.
Thanks very much, Laura. Laura writes here in London. Now, it's looking unlikely that Donald Trump will resign or be ousted before Joe Biden's inauguration next week. A senior administration official tells Bloomberg that in a meeting with his vice president, Mike Pence, the two men agreed to work together for the remainder of the term. That paves the way for a House impeachment vote, which is expected this week. Big tech is also turning its back on Donald Trump. Twitter closed down more than 6% after the platform banned the president, and conservative social network Parler is suing Amazon for pulling its web hosting plan. Joining us now is Alex Webb, who writes about technology for Bloomberg Opinion. We've had a number of conversations with him about this on Bloomberg Radio already. Alex, really good to speak to you to get your take on what we're seeing here. Let's go to the Parler part of the conversation first, and why you think that Amazon Web Services made the decision it did and the response. How do you weigh this all up, given the legislative backdrop in the United States?
Well, I think the substantive stuff is we're seeing that the protest of violence of last week was to a great extent organised on Parler, where now there's now evidence that subsequent efforts, sort of insurrection, essentially, are also being planned, or were also being planned on the service. Now, if you look at the sort of legal side of things, it seems that Parler isn't even imposing its own rules. It has rules about, not inciting violence on its platforms, but its moderation, its moderating efforts just aren't proving adequate. And I think that seems to be the rationale between moves from both Amazon and, of course, from Apple and Google, who have stopped downloads of the Parler app from their respective mobile app stores.
I wonder, it's interesting to see that the Trump administration wants to strip these companies of their protections, which would limit their ability, to allow free speech. And at the same time, the Trump administration or Trump supporters are angry about the limitation of free speech on these platforms. How does that jibe, Alex?
Well, there's a strange dichotomy in the middle of this. We're talking about Article 230, which was a legislation introduced in the 90s, I think under the Clinton administration, which actually was intended to ensure that there was free speech on these platforms, because it can go one of two ways, essentially. It allows free speech on the platforms because the operators are not liable for the content that goes up there. And that tends to actually have been the way that it's been interpreted by the Facebooks and Googles and Twitters of the world. It does also mean that they are not liable if they decide to take stuff down. And that's the way that the sort of Trump side of the equation is interpreting it. So it seems clear there's going to be some sort of update to Article 230, but because there's pressure on it from both the Democrats and the Republicans, but both sides want a different thing.
Right, yeah, so there's some interesting conversations to be had around that particular piece of legislation, Alex. I was reading some analysis yesterday from one of our opinion columnists with the sort of more the cynical view of big tech right now, or these big tech names that we're showing on the screen that have blocked President Trump, Twitter and Facebook, suggesting that, have they done this because the Senate has gone Democrat and they think that they're going to have a tougher ride and that further regulation is coming? Do you draw any links between the way that the Senate has gone and what we're hearing from the technology community?
Yeah, I think there's absolutely, it's making their decisions a lot easier to make. That if the Senate had gone differently, would they be making these calls? It's harder to see. That doesn't mean that they're not the right decisions to make. It, of course, suggests that maybe they should have taken them a little bit earlier. And it's, of course, as we've seen, there's been criticism out of France and Germany from Angela Merkel and others, suggesting that do we really want private companies to be, essentially restricting the speech of a sitting president? Now, I think, personally, and given the current circumstances, it is the right decision to make, because he is, fomenting sort of insurrection in D.C. And I speak for myself when I say it's been quite refreshing not to be scared about what Trump is going to tweet next, because it seems to prompt a huge amount of anxiety around the world.
All right, Alex, thanks very much for joining us. Alex Webb is a technology columnist at Bloomberg Opinion. You can get his opinion and the opinion of his colleagues by typing OPIN-GO on the Bloomberg terminal. Up next, how long will this dollar rebound sustain itself? We put that question to MLive's Laura Cooper next. This is Bloomberg.
Welcome back to the European market open. Around 50 minutes into your trading session this Tuesday morning, European equity markets fairly flat. The FTSE moves to the downside, as does the CAC. The DAX is flat, the IBEX a little bit stronger. So we make very modest gains here for European stocks. Let's take a look at some of the things we're looking ahead to this week. It is a central bank heavy week. Here's what we are watching out for. Today, the Bank of England Deputy Governor, Ben Broadbent, will be speaking on the coronavirus and spending. We also hear from a slew of Fed presidents speaking on racism and the economy. They'll be focused, we understand, on education. Matt?
Meanwhile, on Wednesday, we hear from ECB President Christine Lagarde. She'll be speaking at an online conference on the EU economy post-COVID and post-Brexit. And then the central bank publishes the account of its December monetary policy meeting on Thursday, kicking off another earnings season that is bound to be dominated by the coronavirus pandemic. We get results from major U.S. banks, JP Morgan, Citigroup, and Wells Fargo. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist, to talk about, well, why don't we kick it off, Laura, with the question of the day, which is on the MLive blog, how long will this dollar rebound sustain itself? We've already heard from Morgan Stanley that they're done shorting the greenback. What are you hearing?
Well, I certainly think, the factors that underpin dollar weakness so far through the end of 2020, on the case of these falling real yields and brightening growth prospects abroad, those are reversing at the margin. So that is certainly supportive of this dollar bounce that we've seen in recent days. But I think it's too soon to really call it kind of a turning point for the dollar. Notably, I think, what we're seeing right now is really a case of short covering. So just given the fact that, speculative positions against the dollar are actually still at multi-year highs. So we are seeing some coverage of that. But ultimately, I think it really will depend on whether we see growth outperformance in the U.S., which is going to kind of keep the dollar big going forward, or if we see kind of those rising yields begin to further support the dollar. But I think ultimately the long-term forces are still in play for dollar weakness because we are expecting to see this incredible stimulus, and that would bring with it just these rising deficits.
We saw, even through the violence of last week, Laura, and Capitol Hill, that markets managed to look through that to a large degree and focus instead on the movement in the Senate and what that meant for reflation. Do you see that continuing to be the case as we work our way to January 20th?
Well, certainly that does appear to be the case. If you look at the price action that happened yesterday, even though we are seeing kind of this rising yield environment, the 10-year yield is touching kind of that 115 basis points, we are still seeing this rotation trade intact. So, if we look at growth and tech were the ones that actually came under pressure yesterday, and notably kind of those expensive mega tech stocks. But so long as the yield curve continues to steepen on the back of kind of these rising inflation hopes, on the back of this stimulus-led growth, I would expect that this rotation trade is largely intact. And I think the political turmoil could potentially bring some stumbles, but it's unlikely to really curb that momentum unless we see potential, a recession or kind of economic activity really take a stumble, which isn't in the consensus.
Laura, I just wonder if there's any other catalyst besides the virus right now and the Biden administration. Is there anything else we have to watch for besides the virus and stimulus?
Well, I certainly think, U.S. earnings season kicks off with the bank later in the week. That certainly will be watched for in terms of commentary on the outlook ahead. We are expecting some earnings recovery, but, it's clear that commentary will be crucial for that. And then I think what we're hearing from the Fed, there's this increasing chatter about the potential to discuss tapering later in this year. I think markets are really complacent still to the fact that we're going to have this historically low yield environment, indefinitely. And so I think that's not yet being priced in the markets. But certainly if we do see kind of tightening financial conditions risks begin to weigh on stocks, I think, that's something certainly to watch out for.
Yeah, interesting to ask why the Fed is making these comments now, Laura. And I was reading some interesting analysis that suggested it took a couple of years to get from a point of talking about tapering to seeing tapering happen to actually seeing a rate rise. And so maybe they're sort of looking back to last time and mapping a path to maybe a rate rise in 2023 and saying, look, we have to start talking about this now. I suppose that's one of the questions the market is asking. What does this messaging mean from the Fed?
Oh, absolutely. We are seeing markets begin to price in rate hikes in the back end of 2023. Now, that's not yet kind of weighing on kind of the broader relentless risk rally that we're seeing. But certainly, I think the Fed is going to have to position itself for some kind of withdrawal at some point and really try to coax the markets into this perception that this environment can't be sustained forever. But if we look back to those previous periods of QE and those rate hikes, really, I think the Fed is dictated by the markets. And so I think if they do attempt to taper like we saw kind of back in 2018, back in 2015, where we saw this resulting tantrum as a result in the market, certainly I would expect them to step in and keep financial conditions easy. So I think it's quite a difficult task ahead for the Fed.
Laura, thanks very much for joining us. Laura Cooper there, Bloomberg's MLive macro strategist out of Europe. You can check out her work and the work of her colleagues by typing MLIV Go on the Bloomberg terminal. Anna?
We are getting some interesting lines coming through from the EU's lead negotiator on COVID-19 vaccines. Worth just mentioning this then, Matt. Sandra Gallina, the EU's lead negotiator, updating MEPs on the status of vaccine approvals. And she is saying that the EU the EU nod for the AstraZeneca vaccine is possible on January 29th. So we have a date in the diary for that one. And of course, they've said yes to Pfizer and BioNTech. They've said yes to Moderna, but the storage and transportation conditions around AstraZeneca perhaps make a meaningful difference, which is why we mention it. So that is it for the European market open. Let's stay with Bloomberg TV. Surveillance is up next. They'll continue to take you through these market movements, and European equity markets then making these really modest moves to the upside. US futures, though, do point a little higher. NASDAQ futures up by 0.25%. This is Bloomberg.
Mike Pence signals he'll continue to work with President Trump as the House moves on impeachment. There's no signs Trump will resign. The FBI warns of armed protests ahead of Joe Biden's inauguration. Europe heads for a double-dip recession. JP Morgan and UBS cut growth prospects for the start of 2021. UK Prime Minister Boris Johnson warns that he may tighten lockdown rules in England. Plus, UBS stands by its chief executive. The Swiss bank's chairman reiterates his support for Ralph Hammers. We'll hear from our exclusive interview with Axel Weber. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, if you look at the markets, they're kind of trading sideways. There's not a huge deal to talk about, but it also gives us an indication of what could move the markets, which is central banks, a big week for central banks. And you can see that global stock markets at the moment stabilizing after the losses yesterday. Investors, I guess, feeling a bit more confident about the economic recovery and vaccine rollout, in some cases to buy the dip in certain risk assets. Now, Bitcoin prices resuming their advance, climbing above 36,000. Then I'm looking at energy and travel shares amongst the top gainers in Europe. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrits. Hi, Leanne.
Good morning, Francine. The UK may need to tighten its lockdown restrictions if people don't follow the rules. That's the latest warning from Prime Minister Boris Johnson, saying any complacency about the disease is misplaced. But he's also risked undermining his own appeal with a 7-mile bike ride across London. House Secretary Matt Hancock defended the Prime Minister, saying a long walk or cycle ride are indeed allowed. Now, Pfizer and BioNTech are boosting vaccine output by more than 50%. They're now planning to produce 2 billion doses of their COVID-19 jab this year. The vaccine is intended to be given in 2 doses, 21 days apart. But some countries, including here in the UK, have elected to stretch out the time between the shots in an effort to vaccinate even more people. Italy's governing coalition is at risk of falling apart. Former Prime Minister Matteo Renzi is considering pulling 2 ministers out of the government. His centrist Italy Alive party only controls a handful of lawmakers, but Prime Minister Giuseppe Conte needs their support to command a majority in the Senate. The move could throw the country into a fresh turmoil. And pro football coach Bill Belichick has turned down an offer from President Trump to receive the Presidential Medal of Freedom. The 6-time Super Bowl winner from the New England Patriots had agreed to receive the honor, but that was before last week's riot at the Capitol. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrits. This is Bloomberg. Francine.
Leanne, thank you so much. Now to our top story, and House Democrats have launched impeachment proceedings against President Trump, and a vote could take place as soon as Wednesday, unless Vice President Mike Pence removes Trump first. Sources say that's very unlikely. Well, Trump and Pence met for the first time since the storming of the U.S. Capitol last week and have pledged to work together through to the end of their terms. Joining us for more is our senior writer, Stephanie Baker. Stephanie, 8 days until Trump goes, and it could be a very boisterous or difficult 8 days. What exactly are you expecting?
Well, just heeding those FBI warnings of possible armed protests at all 50 state capitals and the U.S. Capitol again, I think it's going to be a very tense week ahead of the inauguration. And obviously, it looks like this article of impeachment drawn up by the House does have support of a majority there. So, I would expect that to go ahead on Wednesday. And the real question now is what happens in the Senate with Republican Senate leader Mitch McConnell refusing to bring the Senate back to consider that article of impeachment and start a trial until January 19th. That means that the Senate will have to possibly consider it after Biden is sworn in. And I think Biden does not want to have his first 100 days diverted by this impeachment proceedings. He wants his cabinet confirmed and sworn in. He wants stimulus and a new stimulus package to be passed. And now it looks like the Senate Democratic leader Chuck Schumer is considering whether he might be able to do both at the same time. Spend half the day considering impeachment, and the other half confirming Biden's cabinet. So it's really uncertain how this is going to play out. But there is growing calls for impeachment and some kind of response to what happened on Wednesday. Republicans seem to want to pursue something like a censure, but that does seem toothless, really, considering what happened on Wednesday.
Stephanie, even if, the Senate convenes on impeachment post the inauguration, is there a chance that they actually get behind impeachment?
I don't think you need 2/3 of the Senate to convict in an impeachment trial, and that means you would need about 17 Republicans to back it. And it does not look like there are 17 Republicans ready to break ranks with Trump to do that. So even if they do proceed, I think the support for that is tenuous. It is extraordinary given what happened, however, that there have not been more Republicans backing such a move. It does raise questions about, impeachment as a check on presidential power. Does it mean anything anymore? Trump does still have a stronghold on the Republican Party, despite what you've seen this week. Even U.S. companies, for instance, saying that they will not provide donations to Republicans who try to block Biden's electoral college vote confirmation. So, we're in extraordinary times. It's, if there are more protests this week at U.S. state capitals and in Washington, that could perhaps put further pressure on Republicans to act.
But Stephanie, why are Republicans or certain Republicans not ready to act? Do they worry about division in society if we have a second impeachment trial, or are they standing with the president because they think what he's done is not wrong, or are they standing with him because they think that he still holds power, post January 20th?
Well, I think they're saying that, this is not Trump's fault. He may bear some responsibility, but ultimately that, the actions on Wednesday, they claim, do not represent, Trump's Make America Great movement. However, I do think that they are concerned and worried about, Trump's continued support within the Republican ranks, that, if they go against Trump on this and back impeachment, for instance, that they could have Trump mount a challenge to them the next time they have to run for office in a primary challenge, for instance. That the polls indicated that 45% of Republicans backed the armed revolt in Washington. So that just shows how much of a hold Trump does have on the Republican Party. And I think the real issue facing the Republicans is that he could run again in 2024. And with that, he does hold sway over the Republican Party for the next 4 years.
Stephanie, thank you so much. Our senior writer there, Stephanie Baker, following, of course, U.S. politics very closely. Now, coming up, UBS sticks by its new chief executive. The chairman, Axel Weber, tells us why he remains confident in Ralph Hammer's ability, despite a probe into a money laundering scandal and his former employer. That exclusive conversation is coming up next, and this is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Bitcoin volatility is fueling concern the cryptocurrency bubble may be about to burst. Bitcoin is rising today, but slid as much as 26% over Sunday and Monday, its biggest two-day drop since March. It wiped out about $185 billion in value since Friday. That's more than the individual market caps of 90% of the companies in the S&P 500. Now, the chairman of UBS is reiterating his support for CEO Ralph Hamers. That is after a probe into his role in a money laundering scandal at former employer ING. But Axel Weber is declining to say if Hamers will stay in the job.
We're very convinced that, for us, nothing has changed at this point in time. There are no new news. We're monitoring the situation, and we'll update it as events happen. I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's go to your week book, and here's what you should be watching out for this week. Well, today, Bank of England Deputy Governor Ben Broadbent on the coronavirus and spending. We also hear from a slew of Fed presidents speaking on racism and the economy, focus on education. Meanwhile, on Wednesday, we hear from the ECB President Christine Lagarde. She'll be speaking about the EU economy post-COVID and post-Brexit. The central bank publishes the account for its December monetary policy meeting on Thursday and kicking off another earnings season that's bound to be dominated by the coronavirus pandemic. We also get results from major U.S. banks, JP Morgan, of course, Citigroup and Wells Fargo. Well, joining us now to discuss all of this is Jane Foley, Rabobank Head of FX Strategy. Jane, first of all, if we have an impeachment proceeding, and unlikely that we actually get anything in the Senate, but if it were to go ahead, does that, is there a correlation between impeachment going ahead and dollar?
Well, I don't think there's necessarily going to be a short-term correlation. I mean, we saw last week in the market when we were looking at the news coming out of Washington, the market was very concerned about the Georgian election. It was very concerned about the fact that we're going to get potentially more fiscal spending. That was the focus, not necessarily the violence that we saw on Capitol Hill. But I think if we take this into the longer term, we might see a different pattern. So, for instance, if we look at why the dollar remains the dominant currency in the global payment system, why it is such a big currency in terms of invoicing around the world, and why it remains the dominant currency in FX reserves from central banks. We might over time begin to get a change in that pattern if we do get continued questioning about the state of democracy in the US. So I don't think this necessarily is a short-term factor on the dollar, but it could be a long-term impact.
Jane, longer term, what's the trajectory of, depending on what Biden does in his first 100 days, how does that change longer term trajectory of dollar?
Well, I think we've already seen some of that in the price. And what we've seen, of course, that the big move is the impact on nominal bond yields. We've seen those push higher. We've seen the dollar correct as a result. But, of course, we've also seen inflation expectations push higher because of the expectation of more fiscal spending. And, of course, we know really over the last 9-10 months or so that real interest rates are one of those real big factors which has been undermining the value of the dollar. And real interest rates remain extremely low in the US. So from that point of view, I think what we've been seeing over recent days is an adjustment. The market, of course, has been very short the dollar. We've had this new news come through in terms of the fiscal outlay potentially under a Biden administration. And we've seen the rise of nominal yields. So we've seen a good enough reason, I think, for people to take profits on their dollar shorts. I don't think that we've seen good enough reason yet for that trend to reverse because real interest rates remain very low. So I think as we go through the course of this year, we'll be keeping an eye on not just what nominal bond rates do, but also those inflation expectations, and also, of course, nominal rates in other countries such as the euro and European countries.
Jane, at what level, I don't know if it's a level or how quickly they get there, are treasuries a concern? So, if treasuries at 2%, the yield, is that okay? Does it need to reach 3-4% to become problematic for markets?
Well, I mean, it's quite interesting. Some of the comments really from very many central bankers from the Fed over the last few days suggest that they're not generally concerned at the moment. I think, what they would like to see, of course, is higher rates brought on by better economic growth. I mean, that would be a good outcome for them. I think perhaps what they're also trying to see under the Biden administration is higher growth, higher nominal rates, but also higher inflation too. And certainly we've seen that the Fed signal last year that it was average inflation targeting now. And of course, if we did have higher inflation, that would probably help them out in terms of debt as well. So from that point of view, I think a combination of those three factors is probably an ideal. But for the dollar, that could still mean that we have quite low real interest rates. So that doesn't necessarily mean to say that the dollar would strengthen on the back of that particular outcome. So there is the possibility, of course, that the US economy could recover better than that of the Eurozone. Certainly it did after the global financial crisis. We saw the Fed being able to normalize a little bit of its policy. The ECB could not because of the low inflation in the Eurozone. If that scenario begins to develop, and that could be a couple of years away, maybe it could happen next year, that's, I think, when we'll begin to see the dollar turn around and recover some strength.
Jane, is there anything in the emerging markets that you like right now?
I think emerging markets still look attractive. I think generally speaking, if we look at the background really from the last 9 months, if not for the last few years, what we see is we have this big savings glut, and we have an awful lot of people looking for yield. And even at 2% nominal rates, even if we got back to there, we would still have relatively low interest rates from a historical point of view. And that still means that lots of investors are looking for higher yields. So it is going to be interesting to see what happens with yields. That will really set the tone, I think, for how much risk other investors are likely to take. But I think EM is going to remain attractive as long as interest rates elsewhere in the G10 remain low.
Jane, very quickly, if you look at Europe, I mean, there's concern about what happens in Italian politics. I know we've been here before, but there are also questions about the rollout of the vaccine in Europe. What's the kind of level that the ECB should start looking at?
Well, again, with the ECB, it's often the pace of the move, of course, not just the level. Now, the ECB probably doesn't like the euro even at these sorts of levels, but as long as it's fairly steady, perhaps there is nothing it can potentially do about it. So I think stability, perhaps, from their point of view, is probably a number one criteria right now. But although we've had some bad news in terms of Italy politics and the vaccine rollout in Europe, last week we did have a lot of better than expected German economic data, and that, of course, will bring a lot of relief. Now, if we look at the German data, perhaps because Germany is very orientated towards China and exports, that really did help. French data, industrial production, for instance, remained very weak. But if Germany does manage to keep its head above the water in terms of its economic outlook, that will help the rest of Europe. So there was some good news for Europe last week as well.
Thank you so much, Jane Foley, the Rabobank Head of FX Strategy, joining us this morning. Now, coming up, questions over sovereignty. Clément Beaune, France's Junior Minister for EU Affairs, tells Bloomberg that the world will look very different for the UK post-Brexit. We'll have plenty more on that. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's talk about Brexit. And the UK has left the EU, but in many key areas, uncertainty remains, especially around financial services. In an exclusive interview with Bloomberg's Maria Tadeo, Clément Beaune, France's junior minister for EU affairs and a close ally of French President Emmanuel Macron, says the UK is still not fully sovereign despite Brexit. Take a listen.
The UK has secured in this deal access to the EU markets, which we were ready to provide for, but respecting, in many respects, our rules and our standards, which limits their ability to be fully sovereign, but that's the balance that shows. And I think, in a way, it's not the greatest situation because they will have access to the markets, but they will not decide on the rules of these big EU markets. So I think it's much better, and we should demonstrate it, insist on it, to be within the club and to be able to decide on these rules.
And there's one area that the UK did not get a deal yet, and that's the financial services. That's the passport and that's the equivalence. That is huge because, I mean, the city of London depends on that. And we have seen some banks, recently Goldman Sachs, move into Paris for that same reason. There's a lot of uncertainty. And the Prime Minister, he says, we don't have everything we want, but that doesn't mean we can't get it in the future. And perhaps we get it in the future. Do you think that's going to happen in 2-3 years' time? The EU is going to grant full equivalence just like that?
No, passporting is over. That's, you were mentioning the consequences of Brexit. That's a clear-cut consequence of Brexit. So no passporting anymore. And there's no way there can be a passporting when you're out of the EU. That's not possible in our legal framework. What is possible, but it's a unilateral decision from the EU to be decided by us 27, is to give equivalence, so possible access to our financial services markets on an ad hoc basis, meaning that you look at the segment of the markets you want to give access to, you decide yourself, EU in this case, and you can also revoke this authorization of access. So it's a very, very different world from the one we were living in before 31st of December.
Bloomberg's Maria Tadeo there, speaking exclusively to France's junior minister for EU affairs, Clément Beaune. Now, coming up, the bonus pool just gets smaller. Credit Suisse considers cuts of at least 10%. We, of course, have the details next. We also have more from our interview with the UBS chairman, Axel Weber. They also talk about some of the things out there, including the ability of the chief executive to continue as a probe casts a shadow on his appointment. What else I'm looking at is, of course, the markets. The dollar pretty much steady. Global stocks stabilizing after the losses that we saw yesterday. Investors feeling a little bit more confident about the recovery, but also about the vaccine rollout, maybe some of the...
Okay, ladies and gentlemen, I'm placing a stop on profit for Japanese yen. So anybody who followed my trades and placed an order and the order was executed, you need to place stop on profit at 104.187. Okay, but it depends on the margin that broker allows you to trade. You will see the profit at which it will be executed if it will change direction. Okay, speak to you later, guys. By the way, as you can see on the euro side, we place stop on profit as well, because we had position on euro at 121.663. 121.63, as you can see from our position opening chart we opened yesterday. So right now I place stop on profit for euro at 121.683. Just 2 pips, it will be enough for me. Actually, I will move further to 121.713. Just right here. Okay, 5 pips. I'll speak to you later, guys.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg.
As you can see, position closed on euro at 121.713.
Hill. Bloomberg sources tell us the two spoke for the first time since the violence, pledging to work together until the end of term on January the 20th. If Pence fails to act, House Democrats are planning to push forward with plans to impeach President Trump again. Now, the UK is tightening travel restrictions and removing the United Arab Emirates from its quarantine-free travel corridor. That follows an uptick in cases in the Gulf country, which have risen over 50% in the last week. From today, people traveling from the UAE will need to self-isolate for 10 days. And the latest world leader to test positive for COVID-19 is Portuguese President Marcelo Rebelo de Sousa. The 72-year-old is self-isolating, but as of late Monday had no symptoms of the virus. De Sousa is seeking a second term in the presidential election, which is set for the 24th of January. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, with Democrats clinching control of the Senate, it paves the way for lawmakers to enact bigger spending packages. Bloomberg's Tom McKenzie spoke exclusively to the UBS chairman, Axel Weber, about how that impacts his view of the economic recovery.
We've actually downgraded our short-term projection for the first quarter and for the last quarter of last year. We're probably now going to see a double-dip recession in Europe, where the fourth quarter will be, quite negative, around -2%, and where there is a carryover into the first quarter this year. I think that as vaccination gets rolled out, there is actually light at the end of the tunnel for the second half of this year, with a strong rebound of the global economy, and the way there might be through a double-dip recession. So that's a short-term headwind, but medium to long-term, things are brightening up.
How does that inform your views about equity valuations? Are you concerned about valuations, or are they rational given that outlook?
No, so for the short term, neither the European Central Bank nor the Federal Reserve nor any other major central bank is going to change their programs. That's going to provide some good tailwinds for the global economy. So we expect a pretty strong rebound in the year 21, at the end of 21, and then even, and a carry on into 22.
Okay, you touched on the ECB. It's always worth getting your views on the ECB, of course, given your previous position at the Bundesbank. They have, of course, extended their bond buying purchases by 500 billion euros. They're going to extend that at least until March of 2022. Have the ECB done enough then, do you think?
The current policy measures are extraordinary policies for extraordinary times. As we come into more normal times, I would expect a normalization of monetary policy.
Also, position closed on Japanese yen. So if you close position on Japanese yen, if you followed my trades, well done. You did well this morning. We have profit £200 on this trade.
Number of purchases and continue to reinvest. So this monetary policy will be with us for a long period of time, and I dare say maybe too long, because what we saw last time around is we didn't get to normality in the 10, 12 years after the financial crisis, and that gave us very little room for maneuver at the central banks when we entered into these new crises. Same is true for fiscal policy.
What is the board's current view of the Dutch investigation into the CEO Hummers and these money laundering allegations linked to ING. What is the view of the board at this point?
Regulators have much more means than we as a board to look into this matter, but we're very convinced that, for us, nothing has changed at this point in time. There are no new news. We're monitoring the situation, and we'll update it as events happen.
How confident are you that he will remain as the CEO?
I'm very confident that he has all the ability to do a good job as CEO of UBS, and that's where we are, and there's no further update on that.
Okay, I want to get your views on M&A and consolidation in the banking space. You've been a strong voice on this in the past. What is your view? What is the forecast for consolidation within the banking space this year?
My view, and I've voiced that repeatedly, it should happen in a big bang. There should be a pan-European banking market, and we need to get there not in an evolution over the next 20 years. We need to get there now. And we need to get there because of the challenges coming out of these COVID lockdowns, that finance is needed to channel money where it's best used. And Europe needs a deeper capital market, and that will not happen in a fragmented environment. Just as a deep US capital market